What is up, beautiful people? Let's talk about something millions of people are wondering. Is buying a home a good investment, especially for first-time buyers? You've probably heard someone say, stop throwing money away on rent, or owning a property is the smartest financial move you can make. But is it really? Let's break it down. Today, we're diving deep into the numbers, the pros, the cons, and what it all means for you, especially if you're trying to figure out your first move in today's crazy housing market. For generations, owning a home has been a symbol of the American dream, a place to call your own, plant some roots, and build wealth over time. Surveys still show that most Americans see real estate as the most reliable long-term investment. Your parents, your uncle, your neighbor, they all tell you it's the smartest thing they ever did. But before we accept that as gospel, let's ask a big question. What does history actually tell us about home ownership as an investment? So let's rewind 30 years ago. Say you had a chunk of money to invest. You could have put it in a house, stock market, gold, or even lent out the money. Here's what the data shows. US home prices have generally tracked with inflation, growing around 4 to 5% annually over the long run. The S&P 500, about 10.4% per year, 7.7% after inflation. Gold, about 4.9% annually. Just a little better than housing, but a lot more volatile. So, if you invested $100 in housing versus $100 in the S&P 500 30 years ago, the stock investment would be worth way more. But houses aren't just about price growth. They provide shelter, which means you don't have to pay rent. That's called imputed rent, and it's like receiving a dividend. When you factor that in, housing's total return becomes a bit more competitive, somewhere between stocks and bonds, depending on the market. Now, let's talk about volatility. How much the value of an asset goes up and down. Stocks, total roller coaster. Housing, way smoother. During early 2020, for example, the stock market plunged 33% in just weeks. US home prices dipped only about 3.4% in the same quarter. Why? Because homes aren't traded daily on an app. People don't panic sell at 2 a.m. But don't be fooled, housing isn't risk-free. Remember 2008? Housing markets can crash, and when they do, they can take years to recover, depending on the location. Remember, real estate, location, location, location. Now, here's one of the biggest advantages of real estate that it has over other investments that make the returns seem so good: leverage. When you buy a home, you're typically only putting down 3%, 5%, or 20% and borrowing the rest from a bank. That means your returns are based on the full value of the home, not just your cash. For example, put 20% down on a $450,000 home. It goes up 25%. That's a gain of over $110,000. But you only put in $90,000. That's actually a 125% return on your money. Pretty powerful. But leverage is a double-edged sword. If the home loses value, your equity disappears fast. That's exactly what happened to millions of homeowners during the 2008 crisis. So real quick, let's quickly talk about what buying looks like for first-timers. 20% down for conventional loans gives you the best rates, and you don't have to pay a mortgage insurance, but requires major savings. 5 to 10% down conventional is more accessible, but like I said, it comes with private mortgage insurance. FHA loans allow just 3.5% down, but there are extra closing costs, and also you still have that insurance. VA and USDA loans offer 0% down for qualified buyers, an amazing deal. All cash deals, really rare for first timers, but worth mentioning that if you go that route, it's literally just you paying cash and you don't receive that leverage. So I don't really recommend it. You really want to actually use leverage so your home ownership makes sense. So let's zoom out. Here are the keys, pros and cons of buying a home. Pros, you build equity over time like a forced savings account. There's long-term appreciation potential, leverage can multiply gains. fixed housing costs with a mortgage, your mortgage payment never goes up, but your rent goes up every single month or every single year. Possible tax breaks, emotional satisfaction and stability, and then protection against those rising rents. The cons, big upfront costs, down payments, closing costs. You have to pay for all of the repairs and maintenance. There's less diversification. Your wealth is tied into one asset. You can't sell quickly. It's illiquid. You might lose money if you sell too soon or during a downturn. And it's less flexible, harder to move for jobs or life changes. There's always the risk of foreclosure if you fall behind on payments. So let's run a quick hypothetical. Two people, Chris and Jordan, both 30 years old. Each has saved $40,000. Chris uses a down payment on a $400,000 home. Jordan keeps renting and invests the $40K in the stock market. Over 30 years, Chris pays off the mortgage and ends up with a house that's probably worth about $1.3 million. Jordan's investments grow too, possibly even more depending on stock market performance, because historical performance doesn't necessarily mean that will be future performance. So who ends up richer? Kind of depends. In many cases, if the renter actually invests the difference of their savings from the mortgage payment to the rent, then they can beat the homeowner. But that's a big if. Many renters don't invest consistently. They spend all the savings that they get from renting versus owning a mortgage, while when you own a mortgage, it's like forced savings. So a lot of people just spend that extra savings. So owning a home gives you stability, pride, control. Want to knock down a big wall or get a big dog? Go for it. But renting gives you flexibility, less responsibility, freedom to move, and sometimes a better lifestyle for less money, especially in a high-cost city. Some people love home projects. Others don't want to touch a lawnmower. You have to decide what lifestyle you want. So here's my opinion on if buying a home is a good long-term investment. Yes, if you plan to stay put for a while. Stay within your means and use a mortgage wisely. It may not outperform the S&P 500, but it's stable, tangible, and gives you a place to live while you slowly build wealth. But renting and investing can also work sometimes even better if you're disciplined and consistent with your money. Ultimately, there's no one-size-fits-all answer. Buying a home is part financial decision and part lifestyle choice. And whichever path you take, the key is to do it intentionally. Don't just follow old advice or social pressure. Run the numbers, think about your life goals, and choose the route that fits your situation. Thank you guys so much for watching. I hope this helped you see the full picture of renting versus buying. If you found this useful, give it a like, subscribe, share it on your socials, and for more deep dives on financial topics, drop a comment on what you're looking for. Are you guys planning to buy soon? Are you renting and investing instead? Whatever path you're on, here's to making a smart, informed decision. See you in the next one.